what's the silver market looking like for the next 10 years? So I had it pretty right on the first 10 years from 2000. And I was just about as bullish as I was the previous 10 years, although the deficit was starting to build. In other words, we ate up 1.5 billion ounces of stockpile above ground, and we're starting to rebuild the above ground stockpile. Nonetheless, because of solar, I was bullish. Silver is a metal of war. I don't like saying that, but it's true. I mean, let's be objective about it.
Silver is the best performing precious metal this year, returning 22% compared to 13% for gold. Silver, widely known as the hybrid metal, has undoubtedly been lifted by its industrial traits and gold correlations. Although gold garners much of the attention, WisdomTree expects silver to continue outperforming other precious metals in 2025. They observe that despite the volatility, silver has outperformed gold this year, rising more than 22%, while gold prices have increased by 13%. David Morgan, author of 3 books, including The Silver Manifesto and founder of the Morgan Report, reminds silver stackers that silver is historically a metal of war. As global conflicts rise, the demand for silver to support the military-industrial complex and manufacture various weapons and equipment will surge. David also highlights that the paper price set in the futures market does not accurately reflect reality. With increasing industrial and monetary demand, he foresees an acceleration in the imbalance between supply and demand becoming evident. Global silver mine production is projected to grow by 4.1%, reaching 916.1 million ounces in 2024, driven by the resumption and ramp-up of operations that were temporarily halted last year, according to an analysis by GlobalData. However, this production figure falls short of the forecasted demand of 1.2 billion ounces. Silver has been in a supply deficit every year since 2021, and demand is expected to outstrip supply by a similar magnitude in 2024, as seen in 2023. Industrial demand for silver continues to reach new heights, propelled by photovoltaic demand and the increasing use of silver in 5G technology and car electronics. For instance, in 2023, China's newly added installations hit a record of 216 gigawatts, a 140% increase year-on-year, which boosted global capacity additions to over 400 gigawatts. David Morgan emphasizes that the industrial demand alone could potentially consume the entire silver supply in a few years. Adding to this are rising monetary concerns, which drive a surge in safe haven investments. He believes that the increasing dual demand for silver, both industrial and monetary, will have a major impact over the next few years. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
You know, it's obvious to silver investors. It's twofold. It's monetary or investment demand and industrial demand. And the main point is that the industrial demand, particularly with PVs, photovoltaics or solar panels, has been increasing very rapidly of late. What's the silver market looking like for the next 10 years? So I had it pretty right on the first 10 years from 2000. And I was just about as bullish as I was the previous 10 years, although the deficit was starting to build. In other words, we ate up 1.5 billion ounces of stockpile above ground, and we're starting to rebuild the above ground stockpile. Nonetheless, because of solar, I was bullish. And the amount of solar that was projected to be used came out of Metals Focus. I think they had a different name at that time. I can't recall. Jessica Cross did the study. And I based a lot of my analysis on what she'd written. And what she showed was about 140 million ounces a year in about 5 years out used for photovoltaics alone. And what actually happened was we produced the amount of panels that she projected, but we got about a 4-fold increase in efficiency. So it used like 1/4 the amount of silver that it did back in 2010. These are round numbers. And so obviously the demand was there, but the efficiencies improved. So I'm not making excuses. All I'm saying is that she projected a lot of silver demand in photovoltaics. It's true, but it wasn't what she had projected. It was less. But now we're at a point where it's significant, and it's having a major impact on the industrial side. Then you throw AI and the power requirements for that on top of it, and all we need is more and more power. And we're getting in a position with the green movement that we're getting very inefficient energy sources. And of course, the traditional ones are kind of poo-pooed, gas and coal and oil, and yet they're very efficient uh, sources. So the point is simple. The industrial demand alone will or could, I should say could, take over the entire silver supply in a few years. Gold's too expensive. I'll move to silver. The Chinese have awakened to silver. You've got two demands that are increasing at the same time. And that I think is significant. So that's the big picture. That's what I'm looking at. I'm not seeing it take place day after tomorrow, but it's starting to take place. And I think that trend will continue for years. I'm talking, 2, 3 years, maybe 10 years. I don't know.
The silver market has been all over the place in the last 24 hours as the market continues to see questions asked about the overall global economy. The silver market has been rather noisy during the course of the week, as the market had originally broken above the $28.50 level, only to turn around and show signs of negativity. Silver price posts a fresh weekly high at $29.20 in Friday's North American trading hours. Bank of America analysts see silver reaching $35 per ounce by 2026, up from its current spot price. In the year to date, silver has added almost 20%, in line with gold's gains. Looking at the future, David Morgan expects silver to hover around the $30 level, especially through the summer. He disagrees with predictions of a sudden $50 move in silver, advising caution and suggesting that any speculative plays should be made in the options market rather than the futures market. Now, let's redirect our attention to a video.
So the overall trend is up. The overall trend for gold is up. Now, within that overall trend, can the price be managed? And the answer is yes. And it's managed through derivatives. Everybody knows that. The silver market, when you look up, what's the price of silver? That's not a coin that's in your pocket. It's not a silver bar you bought. It's a derivative price. So what you see as a price for a contract, that's what it is. Now, it's correlated to what the price of a physical piece of silver is, but it's not exact. The only more or less quote unquote exact is on the sell side. And in many instances, you'll get spot price, which is from the futures market for physical silver on the sell side. But on the buy side, you're going to pay a premium of depends how hot the market is, what the inventories are. So if you understand the true nature of it, you get an idea of how it can be managed. Because if you can base things on supply and demand, and you can create an infinite supply of contracts, that will obviously be able to manage how high a price will go in wheat or soybean oil, cotton, or silver. The only reason they can get away with it, so to speak, is because on the physical demand side, when enough people stand for delivery, they're able to meet that demand in most cases. There has been instances where they could not meet that demand, and the market has gone into backwardation or they've gotten delays of delivery, but those are rare so far. That's what I expect to see in the future. So it is frustrating. Is there a kind of a benchmark around 30? I would say yes, based on the charts and really more than the charts. Roth and Benham came out years ago, and silver just got to around 30, maybe slightly above, I forget. It says we got to tamp down the silver market. Tamp down the silver market? What's this guy talking about? He's telling you in plain English that they want to protect that price level. And he's associated with the exchange. He's supposed to be a neutral party. He's not supposed to have any opinion on the market at all. And yet he comes out in public and says they need to tamp down the silver market. I mean, if people can't see the obvious, I can't help them any further. Silver's had a really tough run at this 30-ish level. And, it's probably I think it's going to stay there all summer. In other words, I predicted long ago a trading range. I mean, there were others in the industry that I admire and respect that were looking for like a $50 move silver imminently. And I told my readers, no way, sorry, I just disagree. A couple of my members decided he was correct or could be correct. and wanting to, make a play on that, which I advised them, if I were going to do it, this is what I would do. And I do it in the options market. I wouldn't risk it in the futures market and whatever. So probably been a little long-winded, but no, that was how I'd approach it.
Silver is in its fourth year of a market deficit, driven by a supply shortfall and increasing industrial demand, particularly in the solar energy sector. Analysts believe that silver is set to outperform gold due to its sensitivity to manufacturing activity as global industrial production picks up. In line with gold, silver could give back some of its gains before rising, as both metals are in a waiting pattern for Federal Reserve rate cuts. Uncertainties around China's policy support could add a headwind for silver as well. What is your stance? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up and don't forget to subscribe to stay informed. Thank you for joining us on this journey.